Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we have to talk about the price of Bitcoin and what's happening in the market because many are panicking a bit, worried about what's happened with the market and is the bull market over and much more. But if we look at the Bitcoin chart, something bullish is setting up here. We see that the daily RSI, it touched the oversold zone. Now, there's still more downside, I believe, here before we bounce. But the levels it's touching is what we saw in the tariff crash earlier this year. Now, the big downside move, which took us below 30, that we're not there yet. But, in the months after, like April, it touched that levels. That's very bullish, guys, because in a bear market, when you have fear, right, that is a very good thing. It's what we've been talking about. The markets are going to correct from the overbought down to the oversold. There's a reset in the sentiment. And then we find the bottom and then we move. In fact, the Bitcoin Fear and Greed Index showed today we were in the fear zone. Now it has jumped to neutral because Bitcoin saw a little uptick here over $112,000, but we touched the fear zone. That's very bullish, and the RSI near that oversold zone. So we've seen these cyclical patterns throughout the bull market. When in doubt, zoom out. Just go look at the charts. And we know we're still in the bull market based on multiple factors, not one. You see, you can't have tunnel vision on one data point or signals. You got to look at everything to form your thesis. Now, we're talking probabilities here, right? There's no certainties. I don't have a crystal ball, but based on the data that you all can look at yourselves and form your own conclusions, right? But clearly, it's showing us that we're in a bull market. Simple factor here, we're above the 200-day moving average. Clearly, right? We're still in the uptrend, higher highs and higher lows. So the simple 200-day moving average shows us this. Even the Fibonacci extensions, we haven't hit the levels we've hit in the previous bull markets. Now, I know some of you are going to say, hey, past performance does not, is not indicative of future performance. I know that, but we haven't come close to the levels. One thing could say, okay, maybe we're a level below, and with all the buying that's happening from the ETFs and so forth, I don't think that's possible. There's a low probability of that. If you look at the Bitcoin weekly chart, the bears are still in control. But if you zoom out on the monthly chart, the bulls are in control. The MACD has not flipped into the bearish zone yet. So this is where, again, you got to look at multiple factors, right? So we've seen these peaks and valleys and when bulls are in control and then bears, but the bulls are still in control here. And the RSI on the monthly has not gotten to the overheated zone, the overbought zone that we've seen in the past bull markets. In addition, global liquidity is indicating we have more upside. That's another factor. We got Elliott wave analysis where, for example, Credible Crypto highlighted a chart showing we're in a wave 2 right now. And he says this is currently in the subwave 2 of 5 of a larger impulse that began off of 74,000. So 74,000 is where we crashed into from the tariff pullback, of course. And we're seeing the bounce from there. So Elliott wave plus Fibonacci is saying, hey, top not in as yet. In addition, you got Bitcoin dominance. It is nowhere near the levels we've seen the collapses at the top of a market. You go back to 2021, 2022, 2018, and all that, right? Nowhere near that. We've seen collapses along this bull market, such as January 2024 into March 2024, just December, of course, 2024, plus what we've seen from June, but nowhere near. So again, nowhere there near that, right? Plus stablecoin USDT dominance, same thing, has not collapsed to the levels we've seen historically. The Bitcoin Pi Cycle top indicator, nowhere close to flashing. The Coinbase app rankings, right? In the past bull markets, it has held a top 10 to 1 position in the heated bull market where you have euphoria. We have not seen euphoria. We haven't seen everybody being bullish, everybody and their grandma coming in and saying, this crypto thing is amazing. You should be buying and invest. We haven't seen anything like that. We've gotten little appetizers or tastes of it, right? But nothing like the full course meal that we've seen historically. Hopefully you understand my analogy there. So multiple factors, this plus many other things, are showing us the top is not in. So I think we got more to go here, folks. There could still be a little bit more downside. The RSI could dip into the super oversold, like how we get super overbought, right? Doesn't mean that has to happen, but just be prepared because we're talking probabilities here. So this is where sometimes people want you to tell them this is what is exactly going to happen. That's not investing, right? Go play the lottery, go to the casino and know your outcomes right away. That's not what this is. So we have to look at the different scenarios and look at which one has the higher probability of playing out. And folks, I think the higher probability here is that this bull market's not over based on the data, not feelings and emotions. So patience is the key. And the other factor, folks, seasonality wise, the Q4s in a bull market are very, very good for the crypto market and even the stock market. So historical patterns has shown us that in these bull markets, folks, it is going to be a good Q4. Now, again, not guaranteed, but history is on our side. The higher probability is that Q4 is going to be really good for markets. So again, seasonality is another factor. And we continue to see incredible buying from the institutions. Look at the BlackRock IBIT ETF. They've been accumulating. They now have over 760,000 Bitcoin in their ETF. So this number continues to grow. It's in an uptrend. Do you think they're anticipating higher prices? Of course they are. Same thing with the digital asset treasury companies. They are all buying as well. So BitMine, which is headed up by Tom Lee, they bought 233,877 ETH worth $935.1 million over the past few days. Again, right? Look at what's happening. I'm sharing multiple data points and factors here, not just a simple chart. Okay, this little thing here on this chart says we're in a bear market. Okay, but what about everything else, right? You got to look at the market holistically, folks. So I hope you understand what I'm trying to share here because people are starting to get bearish. I see it and they're using one data point. And I'm like, okay, but what about the other factors, right? So again, we are in a bull market based on the data and the information. I think that's the higher probability here. So just be patient. And I think we could see what they would call Uptober. Now, I'm not saying October 1st, we're going to pump. I think this correction could still bleed into October, but then picks up steam and then we get a lot of momentum, kind of like what we saw in Q4 2024, right? And then face melting rallies into November. We saw that and people all of a sudden forgot about what happened, a few months back in September and August when you had the Japanese yen carry trade collapse. They all of a sudden forget. And this is where you can't be emotional because you have to be a student, you have to be educated and understand where we are coming from, where we're at right now, where we're going. And I don't forget those things. So I don't forget about the rallies that we had earlier in the year. And then now we're experiencing a correction. And then come Q4, I think it's October, folks. So that's where I'm putting my chips. And I don't know if you guys agree with me, but I think it's important if you are going to say, hey, we're in a bear market, you have to invalidate all these factors, all these metrics and signals, right? All the items I highlighted there, you got to say why those are not indicative of a bull market. All right, folks, quick word from our sponsor, and that is Trezor. Trezor makes beautiful hardware wallets. I'm a user of the Trezor Safe 5. Trezor, they pioneered and started the hardware wallets back in 2013. They created the seed phrase setup, and their wallets are open source. And they support a variety of coins, Bitcoin, XRP, Ethereum, Solana, and much more. They have a great software called Trezor Suite that helps you to manage your coins. And they have a one-on-one customer service support where you can talk to a representative to help set up your device. Now, they're not going to ask you for your seed phrases, so I just want to make sure that's clear. But it's a great hand-holding service. And folks, if you use my code ThinkingCrypto, all one word, ThinkingCrypto, you can get 5% off a purchase of your device. So check out Trezor. Link will be in the description. Now look at this information. This is very interesting. Singapore, the UAE are the most crypto-obsessed countries, according to a new report. Singapore and the United Arab Emirates ranked globally as the most crypto-obsessed nations. According to a recent report by Apex Protocol, Singapore claimed the number one spot with a composite score of 100, driven by 24.4% of its population owning crypto and leading the world in search activity with 2,000 crypto-related queries per 100,000 people. In 2021, only 11% of Singaporeans held digital assets, but that figure more than doubled by the following year. Now, this should come as no surprise. Here's why. Singapore has been one of the leaders in crypto adoption and crypto friendliness. So while the crypto industry was attacked severely here in the United States over the past 4 years, Singapore was where a lot of entrepreneurs and builders went to. So I'm not surprised by this. And I remember a lot of companies going to Singapore because it was very crypto friendly. It says here close behind, UAE scored 99.7, ranking first globally for crypto ownership at 25.3%. The Gulf nation saw a 210% increase in adoption since 2019, with a significant boom in 2022 when over 30% of the population reported holding crypto. UAE was also another crypto-friendly zone. So you're seeing the data now of the adoption by their citizens, and it makes sense. If you've been crypto-friendly the whole way while the United States and other jurisdictions were attacking crypto, then the numbers are going to skew your way, right? So this is very, very interesting data coming out here. And it looks like the United States comes in third with ownership at 15.5%, followed by Canada at 10.1%, and Turkey by at number 5 at 19.3%. So very, very interesting. But great to see the United States coming in at least in the top 5 there. I think under Donald Trump's administration, things have gotten much more friendlier towards crypto. So more people are holding crypto now. All right, moving ahead, NYDIG calls for Bitcoin Treasury companies to drop the misleading MNAV metric. So, one of the things I've been telling you guys about is I see a bubble forming with the digital asset treasury companies, and that you're going to have a lot of people who are coming in who may not run their business well. And we have to watch out. This could be one of the things that blows up and sends us into a crypto bear market. One of the things I mentioned or reported on this past week was that the SEC and FINRA were investigating some of these companies. So we got to be careful here. So Strive Asset Management acquired Semler Scientific in an all-stock deal, creating a combined company with over 10,900 Bitcoin in its treasury. The acquisition highlights a potential issue with the MNAV metric, which is used to value Bitcoin treasury firms, but can be misleading or disingenuous, NYDIG claims. NYDIG argues that MNAV fails to account for operating businesses and uses assumed shares outstanding, which can be inaccurate. So this is a big call out here. Let's see how some of these companies address this. And I think we're starting to see some scrutiny and investigations by the regulators. Now, I'm not saying Strive Asset Management or Semler Scientific are doing anything wrong here. I don't know. But I think so many people are trying to jump on this train very quickly and maybe doing things they shouldn't do, right? So I like that NYDIG is challenging some of these things and making sure these people are saying the right things and doing the right things, because we don't want people to get scammed, of course. But let's see how this develops, especially, like I mentioned, this week, the SEC and FINRA are looking into some of these companies. Now, folks, let's move ahead. China inaugurates Digital Yuan Operations Center to push CBDC integration. Now, I am not a fan of CBDCs, and I'm glad I live in the United States where there's a ban on CBDCs, right? That bill is making its way through Congress. I've spoken to Congressman Tom Emmer recently. We talked about it. But, other countries, other jurisdictions are going to do this. And the theme or the takeaway I want you to get from here is not that CBDCs are good, but rather blockchain rails are going to power the governments, the markets, and the economies, is what I've been telling you guys. And it's a global movement, and every country is going to do things that are different. Depending on where you live, it's up to you to work with other people that challenge your government and make sure they're doing the right thing and not trampling your rights. But we are seeing the direction the puck is heading in here. And China, even, very strict in certain ways because it's a communist government, still adopting blockchain and crypto. And I think Hong Kong is the testing ground. They've been opening up crypto there. And I believe, like I've been saying, my prediction is that they're going to open up Bitcoin and Ethereum ETF and maybe other ETFs as well to mainland China citizens because they don't have to worry about the capital leaving the country because it will be in an ETF wrapper. So China has quietly taken a bold step in its bid to expand the global footprint of its digital currency. On Thursday, the People's Bank of China inaugurated an international operations center for its central bank digital currency, the digital Yuan ECNY in Shanghai, according to a report from the South China Morning Post. PBOC Deputy Governor Lu Lei framed the move as part of a historical inevitability in payments innovation, with the aim of offering a more efficient, inclusive, and open global cross-border system. So, folks, one of the things we've been talking about is the stablecoin wars are heating up here in the United States as well as globally. And, this is the future of how money's going to move. So you can imagine China's watching the United States and they're looking to push their CBDC in other markets, especially countries they're helping to develop, like many countries in Africa. So there's a geopolitical layer to all of this, right? And they would love to take down the US dollar as the world reserve currency. And we had seen recently that BRICS countries were trying to bypass the US dollar. But I think the United States passing the Genius Act, the stablecoin bill, is a big checkmate to that. And banks and many others are going to be launching US dollar stablecoins, and they will have to back their reserves with US Treasury. So that is a game-changing move, and it's going to allow the United States to further inject the US dollar in different markets. And the US dollar is still the world reserve currency, so people are going to want it. And if you can give it to them in a digital format where they can even put it on platforms like Coinbase, right? Let's say USDC as an example, they can earn yield and move money faster and cheaper. That's going to be a big win for them, right? And the United States definitely wants that. So I hope you understand the geopolitical layer here and what's happening overall. It's not just trading and investing, it's building and using the technology. And of course, countries looking to have their currency used. And everybody's in that race, right? Like I said, other countries will love to take down the United States dollar reserve currency status, but we shall see how that plays out. I think the United States just solidified the dollar as a world reserve currency for like another 50 to 100 years, maybe more. Because we know the future is going to be more digital, not less digital. So very interesting. This is a whole other podcast, because of the geopolitical aspect. But folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. If you appreciated this content, please be sure to sign up for my free email newsletter on Substack. It is 100% free. I put out a write-up today, so check it out, guys. It's a lot of the chart stuff I talked about at the beginning of the podcast. Also, check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. It's a comprehensive course that teaches you everything about crypto. Folks, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.